The exchange rate is the exchange rate between the country of one country and the currency of another country. It is usually defined as the amount of one exchange for $1. If the $1 exchange rate went from 1,200 won to 1,500 won, the currency value of the won compared to the dollar has decreased. Previously, it took 1,200 won to get $1, but now you have to give 1,500 won. It takes more won to get the same dollar. When the exchange rate rises, the cost of importing raw materials increases. This causes prices to rise. Conversely, when the exchange rate falls, the import prices of various goods fall, and the prices of various goods produced using them also fall. The Consumer Price Index CPI in January was stronger than expected. The Consumer Price Index CPI in January of this year rose 0.3% from the previous month. This was higher than the previous month and the expected 0.2% increase compiled by the WSJ의 WSJ. January's CPI rose 3.1% compared to the same period last year, lower than the 3.4% rise in the previous month, but higher than the 2.9% rise predicted by WSJ, which is expected to enter the 2% range. Excluding the high volatile food and energy, the core CPI in January rose 0.4% compared to the previous month, exceeding the previous month and market expectations of 0.3% rise. Compared to the previous year, it rose 3.9%, the same as the previous month, but exceeded WSJ's estimate of 3.7%. A strong inflation report is likely to extend the Fed's wait-and-see stance. The market is delaying the Fed's first interest rate cut from May to June of this year. The $1 exchange rate rose above the 1,351 level again. On this day, the $1 exchange rate closed at 1,350.01, up 11.51 from the previous day. The dollar-yen exchange rate soared by more than 1 yen, exceeding 150 yen. At one point, it went up to 150 yen 88 cents. It has been 3 months since it peaked in November last year. The yen is the weakest among the 10 major countries, with the prospect that the interest rate gap between Japan and the United States will widen. The movement to sell yen and buy dollars has spread. This is an indicator that the Japanese foreign exchange authorities are expected to intervene in the market to protect the exchange rate. In fact, when the yen to dollar exchange rate soared to 152 yen in 2022, the Japanese government at the time usually intervened in the market 3 times. If the exchange rate rises further in the future, the possibility of an actual monetary policy is also expected.